Hello investors everywhere, Adam Hewison here with your market report for Tuesday the 24th of September. Well, the markets just had a 4-day slide in the Dow, and the question is the slide over? We'll be examining the Dow, the NASDAQ, and the S&P 500, but first we're going to start with Apple that reported a very big jump in iPhone sales yesterday. 9 million iPhones were sold over the weekend with the new launch of the iPhone 5S and the 5C. Let's take a look at the stock. The stock yesterday jumped up, you can see right here, 5%, and sort of held over those levels pretty well, closing over the 490 level, but also closing over a parabolic, which is this line here. These are the little parabolic lines, very important. So it sort of put with the upward momentum on the upside. The key thing we're watching right now is the MACD, which is going this way, so we could cross over there in the next day or two, possibly even today, if we see a strong close. Our trade triangles, however, are still mixed. You can see right now we've got the long-term monthly is up, indicating the strong trend going up, and we have the intermediate term trend is down, indicating more of a trading range, or as the market sorts itself out to go higher. We're still looking at a 550 target zone for Apple this year, and I think we could see that coming fairly soon. If we get over this level here, the 510 level, so this is where the barrier is right here, a sort of close over 510 is positive in our books. So let's go to our next market. Next market we're looking at is Netflix. Netflix has had very, very interesting, we talked about Netflix possibly sort of stabilizing a little bit over these levels, and certainly yesterday we had a really negative day. I'm going to scope this in just to a 3-month view. You can see this is a negative engulfing line, and the key thing is today, if we close lower today, lower than the close yesterday, which is 302.19, that will confirm that this is a top in Japanese candlestick terms. The other thing to be a little bit concerned about that we're looking at anyway with Netflix is this area right here, and that is the MACD, and you can see right here it's crossed over into negative territory. All of our trade triangles, by the way, are still positive, and we're going to go with those. They are the leaders in terms of trends. So looking good, possibly seeing some pullback. You could see possibly a pullback to, I think it's the 270 level, putting a Fibonacci measurement in here. So we're looking at 280 is a 50% and 270 is a 61.8%. So possibly see a little bit more softness coming into Netflix, but longer term we like this stock. I think it's a leader in its field. So moving on to Tesla Motors. Tesla is continuing to outperform everybody and shock the skeptics who don't believe this is going to happen, but we're looking for this market to go to $200 a share. It's acting very well. It's obviously higher for the day, and I think if we can get this market to close over the highs that we saw yesterday, over the 285 level, I think we're in great shape with Tesla. Cross the MACD looks good. Like this stock, all of our trade triangles are positive. It looks like it wants to go higher. 200 is our target zone there. Looking at Pandora Media. Pandora Media took a big dive yesterday with Apple coming out. iRadio, its new sort of streaming music app, was going to really be a problem for Pandora. Not so sure about that. Pandora's got a lot of good customers, a lot of reach into the marketplace. Our trade triangles are still very positive on this. You can see the parabolic just barely didn't get touched. That comes in today at 23.33, about another $1 lower. That would change the complexion of this market, but generally speaking, the MACD is positive, as are the triangles. Little softening here, but let's see how this plays out with Pandora. Moving on to Facebook. This is the big move today. Major announcement from a bank saying you should buy Facebook. But we've been looking for Facebook to get about $50 a share. Got very close to that today, $49.66. It's trading around $4,900 right now. So let's see how that plays out. Higher for the week, looks good. All the trade triangles are positive. Looking for a hit $50 on Facebook. Now here's the Dow. We've had the 3 days down. The fourth day was today, of course. Earlier on, we're coming back, and it looks like it wants to close higher for the day. If it does that, I think the pullback has probably run its course, and to show you just what we think of that, we'll put on our Fibonacci, which is going to come in, I think, around 38%. If we measure from the lows here to there, it's a 38% pullback, a classic 38% pullback in Fibonacci, and we can see this market regrouping and taking a run and going high. Now, if we ever get over these highs here, which is 15,658, if we go over there, then this market's off to the races. We could see this market going substantially higher to probably the 17,000 level. So let's see how that plays out, but nevertheless, let's watch these things very carefully. Trade triangles are positive. The MACD is positive, losing momentum, but it's still positive. Let's go to our next market. And that's the S&P 500 cash. Same thing there. We're below the parabolic. MACD is good, still positive there. Also, our trade triangles are positive. This looks like a pullback, and then we'll see this market eventually roll back up to the upside. I think we can get it positive for the week. I think it's going to look very, very good. Now, the NASDAQ is a little bit different. It's been a very, very strong performer this week, simply because, obviously, of what's happening with Apple Computer. That's a big component in this index. So, generally speaking, we're still bullish on this. All of our trade triangles are positive. MACD is positive. Looking for it to go higher. Looking at gold, this is an interesting one for us. Let's scope this out to a 6-month, and actually let's scope it out to a 1 year, because this is what we think is happening with gold. It looks potentially to be almost like a huge classic head and shoulders bottom. Let me show you what I mean by that. So I'm going to go just to a simple line chart, which I can do right here, clicking on this icon right here. I'm going to take off all of the other information we have on there, the parabolic. I don't need that right now. And I'm going to draw a trend line in right here, and you'll see. So that's the trend line we're looking at, and this is what we're looking at in terms of the formation. This looks to potentially be a very large head and shoulders. So this is the head right here. This is the what we call the left shoulder, and this is the right shoulder. Now, the key thing here is for this 1400 level, this trend line, this what we call the neckline, to be broken on the upside. If it goes through there, then I think we've completed a major bottom, and I think we're going to see this market go quite a bit higher. Certainly, I could see a move to the 1600 level, because you just measure from this point here down to this point right here, and that's $200. And then you add that $200 to the $1,400 right here, and that gives you a target zone of 1600. So let's see how that plays out. But generally speaking, watch gold. I think it's worthwhile watching. It's not ready yet, but the other thing to look at here, of course, is the MACD, which is still negative, but it looks like it's starting to lose momentum on the downside. Let's watch that very carefully. Hey, I'm Adam Hewison for Market Club. Thanks for stopping by, and thanks for watching this video today, and every success in the market.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.